Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 25th, 2025, and we're diving into Gentex's first quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Gentex, a leader in digital vision and connected car technologies, has just released their Q1 2025 financial results. Let's break down the key aspects of their performance.
Revenue and profitability overview. Let's start with the top line. Gentex reported net sales of $576.8 million for the first quarter of 2025, which is a 2% decrease compared to the same period last year. John, what are the main factors behind this decline?
The decline in revenue is primarily due to a weaker trim mix in light vehicle production, particularly in Gentex's primary markets like North America and Europe. This impacted the take rates for several features, notably exterior mirror unit shipments, which were down significantly.
Despite the revenue drop, Gentex managed to achieve a net income of $94.9 million. How did they maintain profitability?
Gentex's profitability was supported by a sequential improvement in gross margins, which increased by 70 basis points from the previous quarter. This was achieved through purchasing cost reductions and higher sales levels compared to Q4 2024.
EPS and analyst expectations. Gentex reported an earnings per share of 42, slightly missing the forecasted EPS of 43 from a survey of 5 analysts. John, what contributed to this miss?
The miss on EPS can be attributed to the decrease in net sales and operating income. However, it's important to note that the company did manage to offset some of these declines with increased other income, which helped cushion the impact on EPS.
How significant is this EPS decline compared to last year?
Year over year, EPS declined by 11%, which reflects the challenges Gentex faced in terms of revenue and operating income. However, their strategic cost management and share repurchase program have been positive steps in maintaining shareholder value.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. Gentex reported a gross margin of 33.2% for Q1 2025. How did they achieve this?
The improvement in gross margin was driven by purchasing cost reductions and a strategic focus on cost improvement initiatives. Despite new tariff expenses, Gentex has been proactive in managing costs, which is reflected in their margin expansion.
What about their future outlook? How is Gentex positioning itself for the rest of the year?
Gentex has adjusted its revenue guidance for 2025, taking into account the current tariff environment and its impact on the China market. They are also focusing on strategic sourcing decisions to mitigate tariff expenses, which should help stabilize their financial performance moving forward.
Key takeaways. In summary, Gentex faced some challenges in Q1 2025 with a decline in revenue and EPS, but they have shown resilience through margin improvements and strategic initiatives. John, any final thoughts on Gentex's investment prospects?
Gentex's focus on cost management and strategic initiatives, like the Vox merger, positions them well for future growth. While there are short-term challenges, their long-term outlook remains positive, especially with their strong balance sheet and commitment to shareholder returns.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Gentex's performance in the comments below.